This is the Commercial Real Estate Insights Podcast. I'm Steve Hamoen, and it is 8 o'clock a.m. on Thursday, March 27th. Here's what we're covering today. Burlington's industrial vacancy hits 5.3%. Pricing hits $354 per square foot, and why tenants are suddenly calling the shots in 2025. And in other news, Toronto's industrial REITs continue to defy market gravity. First, let's talk about what's happening right now in Burlington's industrial market, because there's a quiet but significant shift unfolding. Vacancy rates, AREUP. After years of ultra-tight inventory, think vacancy rates under 1%, Burlington's availability rate has climbed to 5.3%. That's a meaningful move. And according to Susan Williamson of KW Commercial, this change is already showing up in the leasing trenches. She told us, the Burlington industrial leasing market has seen a significant increase in availability. This availability led to a slight decrease in the average asking net rates, as well as landlords being a little bit more amenable to leasehold concessions. In other words, tenants have leverage again. But don't misread this. It's not a soft market. It's a more balanced one. More space, more flexibility, but still very much in demand. Next up, let's get into pricing. Despite the uptick in availability, industrial sale prices in Burlington are up 17% year over year, currently averaging $354 per square foot. That's right in line with nearby Oakville and well below Mississauga, which sits at a steamy $465 per square foot. So, is Burlington overpriced or is it undervalued? Well, investors are watching closely. The national narrative is shifting. In Toronto, the GTA's industrial sector still makes up 50% of Canada's total CRE transaction volume, even as other asset classes stall. There's a big reason for that. Industrial is still outperforming. Prologis, Dream Industrial, Canadian Tire, they're still transacting. And in Halton, players like Alinea Group Holdings are quietly building the region's future footprint, with over 1 million square feet of industrial inventory already on the books. That's not just stability, that's momentum. Moving on, we need to talk about early occupancy and build-OUT strategies, because this might be the most tenant-friendly shift we've seen since pre-2008. Today's industrial buildings aren't just concrete boxes anymore. Burlington landlords are pivoting hard, offering early move-ins, flexible layouts, and creative demising options. One insider put it bluntly, "Gone are the days of rock-bottom 1% vacancies. Burlington's industrial market is now all about flexibility and innovation, where early occupancy sets the stage for smarter growth." And Susan echoed that too. She said that what we're seeing now is a rebalancing that lets tenants shape their own futures rather than just accept what's on the shelf. Let's pause on that, because that's not just a market correction, it's a philosophical pivot. And finally, let's zoom out to history for a second. Remember 1992 or 2008? Those downturns were fueled in part by overbuilding, too much space chasing too few tenants, long lead times, empty buildings for years. But this cycle, it's different. Why? Because Burlington hasn't overbuilt. Developers learned their lesson. They focused on larger format builds, 200,000 square feet and up, with flexible leasing baked in. There's still supply, yes, but it's disciplined, not desperate. One REIT analyst we follow said it best. We're trading the frenzy of past recessions for tailored spaces and proactive growth strategies that resonate with today's market. And that's the real story here. This is not a market in distress. It's a market in transition. And if you're a tenant or an investor, especially in Halton, you're in one of the few industrial zones that's still growing intelligently. So, what's the takeaway? If you're an investor, watch the pricing. $354 per foot today may look like a bargain compared to Mississauga's ceiling. If you're a tenant, this is your moment. Use it to negotiate leasehold improvements, early occupancy, or favorable terms. And if you're like Susan Williamson and you've seen it all, 1992, 2008, 2020, you know one thing for sure, real estate always evolves. And in Burlington right now, it's evolving in your favor. That's all for now, but we'll be back tomorrow. Don't forget to hit follow or subscribe and leave a review to help others discover the show. I'm Steve Hamoen. Until next time.